Hello, everyone. Listen, welcome back. We want to hop right into this question that was asked. And the question that was asked is, how fast can you pay off $13,000 to the mortgage? How fast can you pay off $13,000 to the mortgage? And CJ, isn't the line of credit that you're using to pay off the mortgage, isn't that a second payment? Because here you have the line, right? And over here you have the loan. And this is a question that I want to answer thoroughly, okay? Because velocity banking assures us of this one thing, that when you pay off the line of credit, and when you pay off the loan with the line of credit, it'll assure you that you're taking one of the best methods of paying off your loan. It doesn't have to be a mortgage. It can be a student loan. It can be a car loan, any loan. Why? Because what you're doing is you are transferring the amortized interest, and you're transforming it into simple interest. Okay? So let's answer that question, both of them, thoroughly. Now, you see how I drew these arrows around the line of credit? You see that? Why did I do that? That's an indication that this line of credit is revolving. What does revolving mean? It means you can go in and you can come out. You see those revolving doors on those high rises, on those buildings? Goes in and then it comes out. Goes in and comes out. And so that's what a line of credit is it takes the money, and then if you need to borrow it again, you can borrow it. So it's pay, borrow, pay, borrow. Or if you're a velocity banker, it's transfer, borrow, transfer, borrow. Now, since you can do that with the credit card, with the line of credit, is the line of credit a bill? No. It's not. It's one of the greatest instruments that you can use to pay off any loan. Now, over here on the loan side, do you know why I drew a direct arrow? Because that's where your money is going. It's going out. It's going away from you. And you can call them up and be like, hey, I need to borrow another, I know I just paid my mortgage, but can I borrow another $500? They're going to be like, sir, do you not know what a mortgage is? That money is ours. Okay? Absolutely. That's what they're going to say. So, knowing that, right, let's get into the nitty-gritty. Let's say you get paid $5,000 each month. How is that $5,000 split up? It's split up. They told us to have a savings account, quote unquote, $1,400. You got to have a Visa card too, don't you? It's everywhere you want to be. $600 a month. Why? Because you got a 12K balance over here at 21%. Your car loan, it's at $600. All right? $1,200 mortgage, and then $1,200 groceries. My goodness. Huh? $1,200 worth of groceries. You guys must like lobster and shrimp and all that. All right? Over here, we have the loan of $200,000 at 6%. Remember, 6% when you're talking about mortgages is bigger than 21%. Why? Because they're on different scales, aren't they? They're calculated very differently. And like we already said, $1,200 a month going towards that loan. Now, your question was, Amy, okay, how fast can I pay the $13K to the mortgage? You tell me, all right? $5,000. We're no longer going to just keep it in the checking account and segregate the expenses. Forget that. What you're going to do with the $5,000 is you're going to place it into your line of credit. Do you see this 12K balance right here? Listen, I know you said 13K. So listen what we're going to do. We're going to change that into 13K. How's that sound? All right. Let's change that into 13K. I was going to leave it at 12, right? But it was your question. So I'm going to change it. 13K. Okay? It's 13K now. So we put that $5,000 into our line of credit. Now, why would we do that? Because we're no longer going to segregate these costs. And we're no longer going to have a savings account. So the $1,400 goes where? Straight to our cash flow. So instead of the $5,000 going in and then coming out, leaving us with zero cash flow, let's go ahead and add $1,400 to that cash flow. Huh? Is that okay? And guess what? When we use the velocity banking method and we put the $5,000 into our line of credit, do we have to worry about a minimum monthly payment? Do we have to worry about that $600? The answer is no. So we cross that out as well. And where does that $600 go? Good job. $600 goes here for a total of $2,000. My goodness. Look at that. Huh? Now listen, you still got $3,000 worth of expenses, but now you have $2,000 in cash flow that you can utilize. But where is that cash flow? That cash flow is in the line of credit. So let's draw a graph, okay? I want you to see this. Watch this. Watch this. Okay? So we have the 13K balance. Remember, 15K is our limit, but yours can be, whatever you would like it to be. 13K. And the question was, how fast can I pay that down? As long as you got cash flow, $2,000 worth of cash flow inside of the line of credit. This is how it's going to go. So you got 13K, but you paid it down, right? Because the $5,000, so 13 minus 5 is what? 8. So it goes down to 8. But you got expenses, right? So expenses is $3,000. It's going to go up to 11K, right? And then down, up, down, and all of a sudden, $2,000. Watch this. $2,000 of cash flow inside of the line of credit pays down 13K in 6.5 months. You didn't have to go on the beans and rice diet. You didn't have to starve yourself. You didn't have to do anything frugal. You just changed the allocation of your finances. You utilized your line of credit. Now, at the end of the 6.5 months, now, CJ, how did you get to that though? I don't know how you got to that. Okay, all right. Hey, that's a good question. How did I get to that? Let's get it. Okay, we take the balance, whatever it is, take the balance, 13K, and you divide it by the cash flow, which was 2,000. All right, I put a period there for my overseas friends. Instead of using commas, they actually use periods. Absolutely. And some even drive on the left side of the road instead of the right side. Is that all right? That's okay. And that's all right. $2,000. So if it was $12,000, we take $12,000 divided by 2,000. Okay? And that's what? 6 months. If it was $13,000, we divide it by 2. And that's 6.5 months. Is that all right? Okay? And that's how fast we can pay that off. You say, well, CJ, my cash flow is a little less or it's a little more. Then just put the cash flow there and you can calculate out, right, how much or how long it takes you to pay that off. Now, back to the question. It's another question. I didn't forget about it. All right. What about the 2 payments, CJ? Why am I paying 2 payments, and what is the advantage of the velocity banking there? Okay, so is it 2 payments is what I want to ask you. Take a look at the board, and I'll ask you, is it 2 payments that you're paying? Is it 2 payments? Is it? Now, if you're still utilizing your checking account the old way, absolutely. Because then you're paying your card instead of transferring. Watch this. Change the vocabulary. Redefine your line of credit. Redefine your checking account. If you're still using your checking account the old way, yes, it's 2 payments. But if you're using your new checking account, if you're using what we like to call, thank you, Sweep Strategies, thank you, Renatas, right? The sweep account, all right? If you're using it, that as your new line of credit, how many payments is it? You're using this as your new checking account, how many payments is it? It's just one. It's just one. Because you're transferring from the checking. You're taking the $5,000 and you're putting it into the line of credit. And then the line of credit is going to be utilized to pay off the loan. Now, my question to you is, my challenge to you is to tell me what you're going to do after you paid off effortlessly, by the way, effortlessly, the $13,000. What are you going to do with that money? Are you going to put it towards the principal again? Oh my goodness. That's awesome. Because when you do that, you're about 50 months ahead of schedule, of the amortization schedule. It would have taken you 4 years to get to $13,000 doing it the old way. Okay? And so while you're doing that, you're paying, right, that monthly payment consistently every month. Where? From the line of credit, of course. And you're hammering down the principal, which does what to the interest? It lowers the interest. Why is that? Because the interest feeds off of the principal. Okay? I trust I answered your question. If I didn't, info@velocityc.com. I made this video for you. And listen, folks, you gotta ask me the questions. All right? All right, there is no question that I cannot answer. All right? And I am going to tell you, and I haven't forgotten about you, Mark. I'm going to tell you the secrets of the universe. Okay? It's going to be in a video. It's going to involve numbers. And you're going to see that it truly is the secret of the universe. And I'll give you a sneak peek. Velocity, balance, leverage. It's going to be amazing. But anyway, answer the question. So what do? We answered the question about how fast it's going to take to pay down the $13,000 to the mortgage, right? The principal. You got to say principal. You got to make sure you say principal, okay? I wanted $13,000 to the principal, please. And they'll say, okay, yes, sir, yes, ma'am, okay? And how fast it gets paid down all depends on your cash flow. Remember the formula? The formula is the balance divided by the cash flow. And that's how you get the time to pay that down through your line of credit effortlessly. And then we also addressed whether or not that line of credit and the loan, whether that was 2 payments or just one. Remember, we went over how that if you're still using that checking account, that old way, the way the banks want you to use the checking account, yeah, it'll be 2 payments. But if you use it the tried and true way, the leveraged way, the wealthy way, then you'll go ahead and it'll just be 1 payment because you're using your line of credit as your new checking account. All right? Listen, folks, I have a challenge for you. I want you to do this right now. Absolutely. Take from your line of credit, put it to any loan, and watch how fast the loan gets paid down. Period. Let me know what you think. I also want you to check out this video right here because I believe it'll help you tons. You take care. God bless and have a great night.